Etsy stock got a boost from the pandemic. With so many people stuck at home, many turned to crafting and online shopping. Since then, however, revenue growth has slowed and the stock has come back down to earth. At the latest share price, the company has a valuation of $9.4 billion. It's got $1.2 billion of cash on the balance sheet and $2.3 billion of long-term debt, so the enterprise value is $10.5 billion. Revenue over the last 12 months is $2.7 billion, with $731 million of adjusted ebitda and $660 million of free cash flow. Net income, however, at minus $717 million has been impacted by stock-based compensation and increased spending in product development. So Etsy is valued at 3.4 times revenue, 14 times EBITDA, and 16 times free cash flow. The story at Etsy is really about growth going forward. The pandemic pulled forward demand, and that is clearly seen in the flattening growth rates across the board. Gross merchandise sales across the company dropped 0.6% year over year. Revenue increased by 7.5%, but adjusted EBITDA still dipped by 1%. In fact, ebitda margins have fallen from 28.3% to 26.4%, and that's despite the company raising seller fees. Bulls might argue that Etsy is showing signs of its business stabilizing since gross merchandise sales are falling at a slower rate than in previous quarters. They might also point to stabilizing repeat buyers and a 3% increase in total active buyers to 91 million. But a 3% increase isn't scintillating growth. Pretty much every metric is showing only modest performance, and that includes company guidance. The number of habitual buyers on the platform continues to decline from 8 million in 2022 to 7.1 million in the latest quarter. The truth is that Etsy operates in a relatively small niche market. The overall takeaway from all of these results is a flatlining of performance. If you assume that Etsy can grow its revenue at 10% per year for the next 10 years, then operate with an 18% net income margin, revenue in 10 years' time would be roughly $7 billion and net income would be roughly $1.3 billion. Apply a 20 times multiple and the valuation gets to $26 billion, which works out to an investment return of 10.7% a year. The problem is that might be an optimistic forecast. eBay, for comparison, manages only a 14% net income margin and trades at a PE of only 18. Etsy may be able to increase its earnings by raising its fees further, but that isn't going to solve the problem of future growth. The stock isn't particularly expensive now, but it's also not compelling, which is why I give the stock a neutral rating, but these are my personal opinions, not financial advice, and I've got no position in Etsy stock. For more detailed investing ideas, make sure to join our newsletter at overlookedalpha.com.